Meantime, China's consumer price index falling into negative territory for the first time in 28 months on a year-over-year basis. The inflation measure fell 0.3% from a year ago. For more on the Chinese economy and how investors should think about President Biden's new executive order, let's bring in Shahzad Qazi, the managing director of China Beige Book International. Shahzad, great to have you with us. Let's first deal with the executive order, since that's the newer news here. Do you see this as, I don't know, a big change? And will it redirect investment away from China, or is this a formality?
No, I don't think this is a big change. To be very honest, this is an investment restriction executive order in name only. Rather than creating a mechanism through which outbound investment could be screened and then restricted, a reverse CFIUS, as was expected at the onset 2 years ago, what you're really getting is a review mechanism. And there are already, even though the rulemaking hasn't even begun, there are already so many loopholes within this thing that I don't think it's going to change investment decisions as dramatically. They kind of will be on their own track. Coming, of course, we're talking about the private markets, the PE firms, the venture capital firms. Obviously, as you said earlier, it doesn't even affect the public markets.
Let's shift now to the data that we got overnight out of China, Shahzad. Do you think this shows there are a lot of ways to explain the decline? One was the sharp decline, in particular in pork prices, because of heavy rains that impacted pig supply and pork supply. So do you think China's actually headed into deflation, or is it still too early to say?
Yeah, look, I think, through the course of this year, we certainly have seen several instances where there's, some amounts of disinflation present in the numbers as it is. Now, for economists, this year has been incredibly torturous from a year-on-year comparison, just given the on-again, off-again switch that the economy was on last year. But I think there are a couple of things worth pointing out. There's no doubt that demand has been a lot softer this year than anybody anticipated. And if you look at China Beige Book's figures coming out in July, it's very clear that there was a pretty severe pullback on a lot of spending on retail goods and so forth, which clearly is factoring into the limited pricing power of companies.
Do you think that we are in for bigger stimulus from Beijing?
I don't. I think Beijing still sees the 5% growth target as achievable. The view is that only some amounts of fiscal stimulus might be needed. Targeted support to the property market is being provided, and that the cumulative effect of these small measures will be hitting that growth target. This is not the year we see big bang stimulus being rolled out, if we ever do, moving into the future, first of all. I don't think policymakers in China are nearly as panicked about the recovery this year as folks on the street are, just because of the wildly unrealistic expectations they had at the beginning of the year.